Here we can see the 10-year bond yields for the UK, but why have they decreased for 30 years? Now, check this out. What is this and what is the correlation to bonds? Well, it's the money printed by the UK up until 2017, when they stopped publishing it due to people asking questions about why property prices were so high. The correlation to bonds is simple. To buy bonds is to finance a government. You only buy them if they give you interest, since you could have invested the money somewhere else. With the UK destroying its currency, the wealthy started to throw their Great British pounds into anything they could, such as properties, thus inflating them to absurd levels. But corporations and other types of organisations can't do that, so they park their pounds in bonds, since cash can be defaulted or banks can go broke, but bonds won't be paid only in the case of total revolution and the fall of government. Basically, they are paying for the right to lose money by buying bonds that give returns below inflation. British pensions and many European pensions are also doing the same. You pay a pension fund and that pension fund is forced to buy bonds that give returns of less than 1%, while inflation is 3%. They are effectively paying for the right to lose money thanks to the wisdom of Mr. Keynes. So is this one of the reasons why inflation can't go up? If it did, it would devalue the bonds being held by pensions and such. Well, partly. Inflation doesn't go up because everybody is broke. CPI inflation of food is kept down. Real estate inflation is above 10% per year. Basically, the public are working for less and less money, so they aren't spending on stuff since wages are worse and worse every year relative to inflation. This allows central banks to evaporate their debts while seizing workers' wages via inflation, by pretending inflation is way lower than it actually is. Of course, another reason why inflation can't go up is because it would hurt bondholders. So currently the true function of central banks is to maximize inflation at a level just below that which would cause the masses to pick up pitchforks. Economic vampirism, gradually draining the blood of the public just to the point they can't realize what's going on. The masses are forced to pay a pension and the pension is forced to buy bonds that give returns below inflation. Meanwhile, the top 0.1% have benefited enormously from the money printing and can access the offshore infrastructure to minimize taxation. The Keynesian blueprint is easy. Tax small businesses and inflate currency. The big players keep getting bigger and accumulate assets, while everyone else is poorer and can't accumulate the capital to compete. Of course, there is a wider game theory element to consider here. Central banks the world over have been on a printing frenzy since our global financial system entered what could be described as the fiat debt Ponzi, Cantillon insider-driven, crony capitalism phase. Game theory is why doping is endemic in elite sport. It's why the YouTube thumbnails have deteriorated to an open-mouthed soy-face contest. And it's why central banks have ramped up their printing machines to absurd levels. Perhaps the powers that be see the breaking point coming and want to hedge against the pitchfork scenario by changing the economic system via the Great Reset and the implementation of central bank digital currencies. Perhaps only time will tell.